The textile sector has been grappling with factors such as high cotton prices, competition from Vietnam and Bangladesh, and labor shortages playing up amid the pandemic. For a sector which has an ambitious target of $100 billion in exports over the next 5 years, what can Budget 2022 factor in to course correct? To know more, we are joined by KK Lalpuria, Executive Director and CEO, Intocount, Nilesh Hundekari, Partner, Kearney, and Rajat Vahi, Partner, Deloitte India. Thank you for joining in and welcome to this panel discussion.
Thank you.
Thank you.
Mr. Lalpuria, if I can first come to you. High cotton prices this season have become a subject of great concern for the domestic textile industry. With the entire value chain being affected, what really is the way forward for the industry?
Cotton is, of course, a core textile industry, you can say, and has been existing for such a long time in India. And I think it plays an important role into contributing to both our GDP and the exports. India is very well positioned as far as this decade is concerned in textiles because of many reasons. What we feel is that there should be an effort to see that India maintains the cotton supply chain going forward. It's a global commodity. Emphasis should be on to high quality and yields can be improved. So India further gain on the production, and actual users should be promoted by the government to utilize this cotton. There has to be correct statistics in order to plan our produce better. And the import duty which has been recently levied, because India import just the long staple cotton, which is only 3% and not impacting the Indian farmers, should be immediately removed, because India is the only country which has imposed duty on the cotton side. Also, there is speculation on the prices. The government should step in to see that how they can normalize the yarn and the cotton spread so that we stay competitive going forward. I think the way forward for industry also is to see how we can add more value, do branding, develop B2C and D2C businesses, and see how we can gain market share by providing an uninterrupted supply chain, because a lot of mismatch in demand and supply has increased the prices in the cotton. So I think with stable policies, some handholding is required on the cotton side by the government. And we have a clear-cut advantage in this sector, and we have done well in the near past. And we have a great future to develop this cotton textile industry going forward, both in exports and for the domestic area.
Right. Nilesh, if I can ask you now, another important aspect is, the lack of free or preferential trade agreements with key importers such as UK, EU, and Canada, which has put pricing pressure on exporters. How significant can such FTAs prove at a time when the textile industry is struggling to stay up the curve?
See, these preferential trade agreements, they are actually very critical. They are one of the critical enablers. If you have to maintain a landed price, on a landed price, if you have to be competitive with others, this is one of the main issues. And it actually makes a big difference in your relative performance. So for example, where you have a duty disadvantage, we suffer. For example, case in point, let's say United Kingdom, okay, and Europe, where we have a significant duty disadvantage. Our apparel exports last 5 years actually shrank, at almost 6.5% compared to Bangladesh, where Bangladesh actually grew at 3%. This time I'm talking about UK. And for example, in Europe, it's even worse, where Bangladesh and Vietnam grew at 9.6%, we grew at only 2.6%. And if you compare this with the United States, where all of us have, let's say Bangladesh, Vietnam, China have similar duties, there India's exports in the last 5 years were actually better than that of Bangladesh. So we grew at about 2.7%, Bangladesh grew at 2%. And we actually also grew faster than the overall growth in US imports. So there is very, very clear evidence that if you do not have a preferential trade agreements, you will be at a disadvantage. There is absolutely no doubt about it. So it's super important for the government to kind of get us a level playing field when it comes to Europe, UK, and Canada.
Right.
I can also give you another example, and another relevant one which is actually not talked about much. Bangladesh, which is a very large fabric importer, okay, they impose a 25% duty on Indian cotton fabrics. They don't impose any duty on China. Now it's right next door, one of the largest fabric consumers in the world. I mean, if we had parity, we would have got some share of their exports. Certainly, that would have been a big boost for India's fabric market.
Right. And, of course, we have allowed smaller nations like Bangladesh and Vietnam to capture global markets, as you're saying, which brings me to a question for Rajat, that, where did we really go wrong and how do we course correct?
So I think to what Nilesh said is that a lot of it is dependent on scale, right? And what Mr. Kailash was also saying, that today we have to build scale here. And then if you look at the cost of production in Bangladesh, cost of labor, our labor cost is almost 2x of what the cost per month for in Bangladesh is. Our cost of capital is higher. They've also set up very large parks to enable large scale production. Today we are primarily driven by a lot of small scale industries that are trying to compete and build products for the global markets. So I think we have to try, some of the initiatives the government has done, whether it's the PLI schemes to basically make to encourage the production of man-made fibers, and MMFs are very, very important because they almost to 2/3 of the global trade is in MMF. So I think the government is doing the right initiatives on that. Also setting up these large parks under the Mitra scheme. That's also the objective, is to basically create the scale, because scale will help in procurement, scale will help with our logistics, scale also brings down our cost of manufacturing, and then on the other hand, the government could also look at putting some initiatives around lower cost of capital for certain types of producers who are able to scale up, because cost of capital is a big element in this, right? And if I just look at it, I think the expectation from the PLI schemes today is that they are going to almost I think it's a 10,000 crore PLI scheme. They expect the amount of investment to be around 19-20,000 crores, so 2x of that, creating 7.5 lakh jobs. But I think for scale, we need to create the manufacturing facilities to be able to compete with these markets, right? And the likes of Bangladesh and Vietnam, to be able to sort of at least put our product at parity to them. Then obviously the FTAs and all the other things kick in. At least on the production side, we should be able to do that. So I think those are some of the areas that we could look at and see how do we correct that.
Also, Mr. Lalpuria, how can India's textile exports hope to cash in on the China +1 sentiment, and also counter competition from say a Vietnam or a Bangladesh?
See, Vietnam and Bangladesh are basically labor arbitrage, and soon I think once their economy develops, they on the labor side or on their economical cost side, they will be at level playing field, unless India addresses a couple of things very well. Say on the MMF sector, still we are 20% higher on the raw material cost. On the energy side, like if, as I mentioned, on the renewable energy, if we unshackle the regulations to a large extent, India has already taken the lead and met the global targets in 2024 as compared to 2030. So I think if they unshackle the regulation on this side, the renewable energy will provide a lower cost of utility cost as well as energy cost to the Indian entrepreneur, to bring it on a level playing field to Vietnam and other countries who are having lower power cost. Secondly, on the labor side also, if it allows a better technological upgradation fund and in other areas like EPCG scheme and import entitlement, there will be help to the Indian entrepreneur to match China's expertise, because there are lesser regulations over there as far as exporters are concerned. So I think with China +1 strategy, we can clearly observe that brands and retailers who are trying to de-risk their supply chain to another textile country, which they were dominating in the last decade to China. I think there is a clear opportunity which is visible and clearly seen in the numbers, because China's cost competitiveness is waning, and their still market share is around 36%. And even a 1% market share shift will be almost $10 billion market. So because the global textile trade is 1 trillion and China is holding around 35% market share, and even 1% market shift will be 10 billion. So that's the scale which India is looking at, and that's the reason our minister and our prime minister are speaking about $100 billion, which is achievable. But we need a framework where the policies are made for a longer term, so there is a durable, there is a better planning by the Indian entrepreneur. There is investment into it so that they can scale up their operations, and all the other hand-holding on the ease of doing business, etc., can be done so that we can ensure the supply chain to the brands and retailers who are looking out to de-risking their supplies. And over and above, as what we have seen in cotton particularly, recently you see there is a ban on the cotton coming out of the Xinjiang area. So India is a large player in cotton, where India, if manages their cotton supply well enough, we can have more value addition in India itself on the raw cotton exports or the yarn exports, so that we can scale up our operation and see that we grow our market share to a much better and respectable figure. So all these factors, I think, are well known, and I think we have a very dynamic, Sri Piyush Goyal, who understands the nuances of the industry, commerce, and the textile as well. And I think with such kind of a leadership which we have, where we have a visionary, prime minister, I think the 100 billion target is not incorrect. It is achievable. Only thing we need support, guidance, hand-holding from the government side, and correct policies to see that how we can achieve this target, very well.
Right. And actually, Ministry of Textiles, as you said, it has set a target of $100 billion in exports over the next 5 years. But like Nilesh, I want to ask you, do you think this is realistic given, the current set of issues that the industry is facing? Is it a realistic target, and what are the steps needed to make it achievable?
See, I want to put this in perspective to continue with what Mr. Lalpuria said. Our share of global exports today is about 4.5%. Okay, so it's our share is relatively small, okay, as to where we stand. Now, I think 100 billion, I would call it a big, hairy, audacious goal. It's good for the government to have set an inspiring goal for the industry, and as you can hear from Mr. Lalpuria's comments, I think the industry has actually welcomed it in many ways. They have said it as saying, well, it's a great aspiration to have. Now, historically, if you look at it, last 4 years, our performance has been stagnant. Okay, so therefore, your question is saying, hey, listen, is this too ambitious, and can we really achieve it? That's probably where it is coming from. If I give you a couple of other examples, if you look at, what is the fastest growth rate that any Asian economy had in terms of exports in the last decade? That would have been somebody like a Vietnam. Okay, so if you grew at something, the rate at which they grew, at any fastest rate at which any Asian economy grew, we'll get to about 65 billion. Okay, now that doesn't mean we should constrain ourselves with the fact that we cannot grow faster than that. I already gave you an example of how Bangladesh, one of the largest fabric importers, we have a duty disadvantage, and therefore sometimes one act like that can actually unleash that market completely for us. So there are big opportunities. I would say going to whether it is 65 or it is 100 or anywhere in between, I think the actions that we need to take are very clear. Okay, and the actions are the following. We need to work on all areas. India actually has a strategic depth in textiles which very few countries have. Right from fiber to yarn to fabric to apparel, we do everything. Okay, and we do man-made fiber as well as we do wovens and knits and everything. So our depth is actually quite high. So we can actually fire on all cylinders in that way. The biggest market or opportunity, of course, is in exports. So really, at least a 16 billion growth opportunity here exists. And here China plus one is the perfect sentiment. Every single company that sources apparel wants an alternative to China, and China is such a huge supplier that when they're looking for alternatives, that means it's a huge business opportunity for us. Second, in fabrics, even in fabrics, at least a $4 billion jump in the current exports. We have to position here India as a regional fabric hub, starting with cotton wovens and then extending to other subcategories. Thirdly, home textiles, and home textiles is one of those places where Indian companies have actually world scale. They have world dominance in many instances, and Mr. Lalpuri can tell you about what Indocount's position is in the world trade. And there are enough other examples. You have Welspun, you have Trident, very large companies. So there, again, we can get almost a $4 billion increase at a minimum, building on the existing advantage that we have. And here, all the Indian home textile companies, they really supply to the largest customers in the world, and they have a very big share of those. Man-made fiber and yarn, again, maybe $2.5 to $3 billion jump here. We have to gain big share in the man-made fiber products here, when we don't have as much of a share. And as Rajat was pointing out, this is man-made fiber globally is a larger market compared to cotton. So there, it's a bigger opportunity for them. And then technical textiles, again, profitable business, niche business. But again, we can get another $2 billion jump easily here in this business. And of course, there's a significant domestic demand growth as well. So clearly, opportunity is there. Now, what do we need to do in order to do this? I think Rajat talked about the initiatives that the government has done. Very good initiatives, very encouraging signs from the government. They moved really fast. They've launched multiple schemes. What is now required is very good implementation and execution of these schemes. So I think that's really important. And then industry players have to take advantage of these schemes and demonstrate what they can do. This will though require significant investment. Our estimate is that it will require at least a $20 to $25 billion worth of new investment in this whole value chain. And this is a capital intensive business, at least the rare part of the value chain. Now there, one of the big barriers is that the import duties on machinery are quite high. There is almost a 27% import duty on textile machinery. There is a 18% GST. So if that 18% GST does not get adjusted with the rest of your GST liability. So almost 45% is the additional increase in cost when you importing capex. And these are machineries where Indian manufacturers are still behind in terms of producing the world-class machinery that required. So every textile manufacturer imports this machinery. Now, as it is, interest costs in India are high, then your capital becomes 45% more expensive. And in spinning, weaving, processing, you require almost $1 of investment for $1 of turnover. Okay, so it really becomes an expensive proposition. So one of the ideas here is that can we rationalize some of these duties on machinery or promote indigenous manufacturing? And it will take time. Indigenous manufacturing is not going to be able to produce the kind of quality that some of the European suppliers or Japanese suppliers do in the next 4 or 5 years. It will take time. So till such time that happens, we have to find a way to make sure that our capex cost actually comes down. And then, of course, there are other things that need to be done. Some factor cost, there is a disadvantage. Power is one important area. Service levels, Indian suppliers service level sometimes is a little lower than what other countries can provide them. Digitization is a big driver. Similarly, design capabilities, how good is your ability to design the products that they need well ahead of time. And finally, sustainability and traceability are becoming the other two new mantras for differentiation. Every buyer wants to know where your cotton came from, where your yarn came from, how did it travel. Frankly, a bunch of things to do for the industry as well here.
Yeah, quite a bit that needs to be done. Rajat, taking off from what Nilesh said, and also you mentioned about the PLI scheme. of rupees 10,683 crore for textiles, which is specifically aimed at boosting production of man-made fiber fabric, apparel, and technical textiles. So how is this expected to help in the revival of exports?
So I think Nilesh has already addressed many of those points, right? Because it's not just the capability enhancement; it's about design capability. It's about increasing our improving the overall infrastructure. We also have to look at the capability development of people, training schemes. How do you train manpower? A lot of the manufacturers that I'm talking to, they struggle to get right trained manpower. So we need to sort of improve the quality of people going into the business as well. It's pretty labor intensive and capital intensive business. You require that part, right? So I think, and the other part which is interesting is that today a lot of the large retailers, when I look at global retailers, Walmart, Target, they're all based. They have huge operations out of India, supporting their global operations. They're also sourcing a lot. I mean, upwards of 600, 700 million, $1 billion of sourcing is coming out of India on a lot of these categories. It may be around hard furnishings, but more and more they're looking at soft furnishings. More and more they're looking at apparel. And I think the objective should also be, how do we build the relationships with them here? How can we become a bigger part of their sourcing play in India? Because going to try and sell to them in the US or in Europe always is you're up against global brands, global players. But today, many of these companies have identified India as their hub for sourcing, not just of product, but also capability, finance, accounting, sales, all their data analytics, everything is being done out of here. And they've also sort of on that basis improved their sourcing in India as well. How do we build those relationships here to become a bigger part of their pie in India? And again, goes back to Nilesh's point. How do you tick all those boxes about sustainability, about having the traceability is a big play today. Where is it being what type of farms is it being produced in? What's the quality of people in that farm? Are they using natural sort of fertilizers, or they're using synthetics, and how is that impacting the product? So traceability all the way back to the farm is becoming a very, very important element. How do we enable some of these things? And I think again, like, there are lots of things to do, but if we pick up a few of these areas, go into some sort of large scale production, tie that into the large manufacturing hubs that are, I mean, the logistics hubs that are being created to be able to bring in the manufacturing parks, and then also through better capital enable that. Because at the end of the day, as Mr. Kailash was saying, that we are very well established today. A lot of our big players, whether it's the Tridents, whether it's the Welspuns, have created very large presence there. They sell to the top brands in the US, whether it's Ralph Lauren or Calvin Klein, or all the top brands are buying from here. So how do we scale that up? How do we get more and more, for them to feel comfortable that when they are buying from India, they are assured of quality, they are assured of traceability, they are assured of sustainability, and they are assured that they are going to get the best quality product on time. So improving some of our logistics and export processes as well. I mean, just a small example today, you look at all these e-commerce companies, they have an ambition to make India, just exports out of India $10 to $12 billion in the next 5 years, going up to about $15 to $20 billion in the next 7-8 years. Now, how do you enable that through better export policies and regulations, so that consumers and shoppers globally can order Indian products from these various online platforms? I mean, China on that one day does $30 billion of e-commerce on their singles day. That's our entire turnover today in India, right? For the annual turnover of e-commerce is about 30. They do that in a day. How do we make that so that more of these companies can get on these platforms here, are able to export, and when on very large scale, so that they don't have to necessarily be traveling in these markets, but they can export directly from here. So I think lots of initiatives, many of these initiatives are in front of the government. They are taking a lot of steps to enable that. The point now, like what Nilesh was saying, is how do you enable that quickly? How do you implement it well so that these things get realized?
Right, and Mr. Lalpuria, sustainability is obviously something which has come up a lot in this discussion, but it is an important factor when it comes to the future of this industry. How can India play a major role in taking a lead here?
Sustainability is a very important factor in front of the government, and I think the Indian government is taking correct steps towards it, as it took on the renewable energy side, where it was able to, build up or meet the target in 2024 rather than 2030. So I think the most important area where it is successful is this renewable energy, where it should work and unshackle the regulations so that, the entrepreneurs can really move ahead very quickly and ensures renewable energy to the manufacturing sector. And this will help into reducing not only the carbon footprint, but also bringing about the cost reduction. So that is number one. The second is about the sustainable development goals, as informed by the UN and implemented and recommended by them, that each of these companies who are registered with this, or the countries where they are working upon, there are 17 sustainable development goals where one can really work upon some of the areas and see, and even quantify that through certain tools to see that how they are moving ahead. Because as a country, we all stand committed either towards the reduction of 1.5 degrees centigrade or 2 degrees centigrade in the overall temperature going forward. Now, as we all know, you see, the climatic change impacts the life and lifestyle of all of us, including the farmers, and more to the farmers because their produce get destroyed. So I think the government should instill a confidence with the corporates to come forward and participate along with the farmers to see how yield can be improved, how we can tackle on the climatic change through contract, manufacturing, and all those initiatives which it has to take. Then there are ways how you can improvise upon, research and innovation, where you can start utilizing sustainable fibers, sustainable products more into your offering so that you overall reduce the carbon footprint. So I think with this kind of initiatives towards the industry, like zero discharge and less use of plastics and more sustainable fibers getting used, and making all sort of regulations where how the, as what Mr. Wahi has said about the traceability systems and all that. So instilling that confidence for the corporates to participate in the overall, sustainability factor. Because you see, going forward in the next 3-4 years, the EU and other countries are making regulations where they will compel the vendor to follow certain compliance and guidelines in supplying this product. So it will convert into an entire circularity economy wherein, there is recycling and there is sustainability factor involved along with the product what you supply. So I think it is a very important area where I think the government is taking right steps, but I think with some more global steps which needs to be induced into the entire, corporate structure, so that we all can lead it to a more sustainable world going forward. So I think it's an important area going forward.
Nilesh, if I can come to you, I mean, of course, another aspect is technical textiles. How do you see the advent of such textiles in the country, and how can these act as a catalyst for India's increasing share of global exports?
See, technical textiles actually is less understood in the country compared to, let's say, apparel and home textiles. So out of the $1 trillion global textile market, technical textiles is almost 16%. It's actually a bigger market than home textiles, which is about 7%. Now, in home textiles, if Indian companies could establish a leadership position for themselves, there is no reason why we cannot aspire for the same thing in technical textiles as well. It's a much more higher value addition business, much more profitable, therefore, much more technologically intensive, therefore less subject to cost kind of arbitrage issues. So it's a better place for India to compete actually in many ways. So we believe we can actually get almost a 10% growth in this market in our technical textiles exports. There are 3-4 end-use segments that we can target more actively. So mobile tech is one of them, which is the applications in automobiles and transportation segment. Indotech or industrial applications is another segment, and then pack tech, which is the packaging applications. So these are 3, and geotech finally. So these are the 4 segments which are actually the fastest growing amongst all the categories within technical textiles, and we should target a good share of each one of them. Now, actually, technical textiles will become almost 18-19% of the world market in the next 6-7 years. So it's actually growing quite fast. So there will be a relatively higher dependence on technology than when it comes to apparel as well as home textiles. So investing in the right technology, getting the right capex is super important. Getting the right technical managerial skills is important. Our PLI scheme that has been launched for technical textiles actually is very welcome, and this can provide a big booster for helping people in bringing in fresh investments in this area. Now, the market opportunity is not just in exports, but the opportunity is also there in the domestic market. The domestic market also is expected to grow at about 10-11% over the next 5 years. It's actually growing much faster than apparel or home textiles. So even within the domestic market, there'll be a significant demand for Indian produce. So it's a very good opportunity, and the government has launched the right incentive schemes. And there are some large companies who have actually made put good facilities in this area already. So I would actually expect to see a lot more emphasis and investment coming into technical textiles.
Right, and as you mentioned, the PLI scheme is a step which promotes this thought. And Rajat, if I can come to you now, of course, the pandemic created a lot of issues for the textile industry, which is highly labor intensive in its scope. How do you see the road to recovery in the coming time for this sector?
So I think that, I mean, the positive side is that while it did cause the disruption and the entire country faced it, every sector faced it. So I don't know any sector that got us saved from that. But just talking to clients right now, the wave 2 or wave 3, they are not looking the impact to be that significant. There's not been a lot of labor, or people have not moved back to their hometowns. They're trying to also, their hope is that the lockdowns in various big cities will not be too long, that people will head back home, because the challenge really is when labor moves, then to get them back, the whole disruption, and plus the the very severely enforced lockdowns, which sort of really sort of upset the whole economic balance in the second wave. This time around, it doesn't seem to be so severe. Even when I'm talking to the end customers, the apparel retailers and accessory retailers, they're also, while they have had an impact in the January business, because that's a critical month coming after holidays for end of season sales and clearances, and people are also in the shopping mode. That's obviously got impacted. It'll have a follow-on impact on everything else. That means your next collections get later and all of that. But if I look at their globally, if I look at US, lots of Europe, parts of Europe, Southeast Asia, the lockdowns haven't been that severe that orders have been cut and the impact is so my sense is that we are not going to face that level of challenge. And I think the rebound, at least globally, seems to be quite strong on most consumption categories. Hopefully we'll see the same here as well. And actually, so I think I'm not sure whether that's going to be bigger challenge. The bigger play today is, can we get some of these PLI schemes that have been launched, where you've got a lot of interest? How do we implement them quickly? How do we get these things off the ground and make sure that these actions get taken? Because as you mentioned, that the China Plus One is a great time for India. We are in the hot zone right now to really, and it's a real sweet spot for us to bring in some of these, as companies are looking at adding on newer sourcing hubs. Great time for us to take advantage of that. So I think my sense is, in the mix of that, it sort of could be a perfect storm for us where we are right now. And it's a question of us taking the advantage of that. And Indian consumption is also going up across these categories, right? You're seeing so many D2C brands coming up here. I mean, the D2C segment alone, they're talking about becoming $100 to $200 billion segment in India, and most of it is end consumer products. Many of them are apparel, accessories, home furnishings. So I think your domestic demand should also drive a lot of this growth.
Right, and I have a final question for all of you. That what are your expectations from the budget for the textile industry? And I'll start with Mr. Lalpuria on this.
See, the textile budget should be focused on core industries like textiles, much more than what has been done, because as what we have spoken so far is about the great opportunity lying in front of us. So it can contribute to a large extent to our Indian economy going forward, both in exports and the global market. So I think this interest equalization scheme, making funds available for the growth, at a much competitive rates, then supporting on the ease of doing business by simplifying, the technological upgradation fund, the EPCG scheme, the import entitlement schemes, and the various other, refund of taxes and levy schemes, will help the exporters to get their funds quickly, because when you grow, being capital intensive industry, you need, both term loans and working capital. And if the working capital is short, and if you are spending money on servicing that, it is a drag on your EBITDA margin. And then they should come about through dynamic schemes like PLI, which and the textile park for a plug and play operation, so that even the MSME and the large players can participate equally and participate in the entire supply chain, ensuring the brands and the retailers with a concrete supply chain, because in this decade we will see a lot of disruptions on the supply chain side. So I think those are the areas where it can make the regulations, the regulatory policies for a much longer period, say 5 years, so we can plan our business plan much better. There would be more stability, and we can also ensure the brands and retailers of a consistent supply chain. Whereas this China plus one strategy, where we are seeing that, which is providing us the opportunity and also helping the brands and retailers to de-risk themselves. So I think the hand-holding is required, and it should be more broad-based. The PLI scheme is currently only for MMF and for the technical textiles. Of course, that's the most welcome step, because we were lagging behind it, and so it should be more broad-based. And lastly, you see the MMF area was not able to develop because you see we are expensive as compared to China by almost 25 to 30%. And that's the reason we could not be, we are not able to develop the downstream product and exports. The duty was collected on the raw material rather than on the end product. Now, if the end product is promoted, there will be a lot of employment generation, there will be a lot of value addition within India, and that will help India only to grow their numbers. So I think these are the areas where the government should work upon.
Nilesh?
I think Mr. Albrecht covered most of the key issues. So I think to the extent working capital pressures on the industry can be released, it'll help. If you look at the profitability of textile companies, it is not very high. So very high capital intensity on one hand, low profitability on the other hand, and in apparel, again, it is high labor complexity on the other hand. So associated risk of managing large number of people becomes a little high. So therefore, anything that can be done to eliminate, reduce the working capital pressures will be great. I earlier talked about the import duty on capital equipment. That's a big deal. That's a big thing. Although might not be that easy to do it, because it might become part of bilateral negotiations with the European nations. So it will become part of a larger package, I would imagine. And the other demand which the industry has been having, there has been a lot of back and forth on the GST in the domestic market, where right now the government has appointed a committee to relook at the whole rates across the entire value chain. So I don't expect it to happen this time. It will happen after the committee has looked at it. So it will not happen in the budget. But that is the other, I think, area of concern for the industry.
Rajat?
I think Nilesh and Mr. Kailash have already covered pretty much everything. I mean, my one recommendation would be, let's implement and get some of these things off the ground, broad base it, so that we are looking at it. And I think one of the points Nilesh mentioned is that the import duties on capex is really critical, because it's a high capex industry. We want scale, and since we are not able to manufacture these machines locally, it will take time to do the make in India in these. So let's make it easy access, whether it's through duty drawbacks or a refund depending on scale being hit at a certain number, whatever the criteria is. But I think it's more, for me, it's more about implementation of the mega parks, the plug and play parks, and also the PLI schemes. I think it would be good if we just implement them well to get scale.
Right. So a lot of anticipation in the upcoming budget for the textile sector, which has been struggling, and hopefully there will be the road to recovery will be smooth in the times to come. Thank you so much for joining us today and sharing those key insights. Thanks a lot.